Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is in a very strong uptrend. The market has been creating a series of monthly higher highs and higher lows, pushing to the upside quite aggressively, fueled by strong institutional longing. Now we will be speaking about institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that the monthly time frame is showing a very strong uptrend. The last move was this impulse to the upside, so the next logical step would be to first see a correction and then the continuation to the upside. And let's also keep in mind that all this push to the upside and this uptrend has developed as a break, retest, and rejection to the upside of an important historical structured zone, because this level was already acting as previous monthly resistance for quite a few years, all the way back from 2020. The market, every time it was testing this zone, was respecting it as resistance. Then the market managed to break above the zone. All that previous resistance became support. The market retested the previous resistance, now turned support, respected it as support, and at the moment is in the process of rejecting this level to the upside. So here in the monthly, everything looks quite bullish. Let's keep this in mind and drop down on the weekly time frame. Now, from a weekly perspective as well, the pattern is very clear. We first had a strong impulse to the upside, then the market consolidated in the form of this triangle formation. A triangle formation or wedge simply means that the market is creating lower highs and higher lows at the same time. And after a consolidation in the form of a triangle formation, you expect the market to continue higher. I'm sure you have seen this pattern over and over again. When you see the impulse, then the market consolidates in the form of a triangle formation, and then you have the breakout to the upside. That is exactly what the market did here. So far, we are seeing the creation also here on the weekly time frame of an uptrend. So the creation of weekly higher highs and higher lows. So the market is at the moment quite strong and pushing to the upside. We can also notice that we just had a strong impulse followed by a correction. Now, if we want to measure a correction after an impulse, we have to take our Fibonacci from the low to the high of the impulse leg. This shows us how at the moment the market has already rejected the 0.618 Fibonacci retracement, which was also lining up with the previous level of resistance, which is now turned support. So this means that actually we had a confluence of support at this level, because we had the horizontal structure level from which this rejection to the downside started. And as we know, previous resistance, once the market breaks it to the upside, becomes support. And also, we had the 0.618 retracement, which is the golden ratio. So the retracement level to which most of the times the market will retrace to before then continuing higher. And both these levels were lining up in the same area of price, therefore creating confluence of support inside of this zone. And when you have a confluence of support zone, you have an increased probability of seeing institutional longing inside of that level. So the market has tested a confluence of support zone and has already started rejecting it to the upside, so more bullish price action could be expected away from this level. Dropping down on the daily time frame, what do we see? Now, here on the daily, we see the rejection to the upside very clearly. Now, I had spoken about gold when the market was testing this level exactly here, and explained all the reasons for which I was expecting this rejection to the upside, and that is in fact exactly what the market just gave us. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. But at the moment, what do we have? Well, in a situation like this, what we have is a market which is now once again creating bullish structure from a daily standpoint. But before we move into more details into what kind of structure and price action we have here from a daily standpoint, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing on gold. Now, what we can see here is that net positions with the last reports have started being increased once again. We went from 161.2k net positions all the way up to 174.1k net positions. This shows how it seems like institutions are again starting to move back to the bullish side for gold. Now, keep in mind, we still don't see longs getting added. Longs pretty much remain the same. However, shorts are getting closed even more. We went from 83.5k shorts from an institutional perspective on gold all the way down to 59k shorts. So institutions are starting to close their shorts. They're not adding longs yet, but they're starting to close their shorts. And if we look at the shorts compared to longs, the reason for which we have such a high net positioning is because institutions already have a massive amount of longs compared to shorts, with 234,000 longs compared to only 59,000 shorts. So they are aggressively positioned to the bullish side for gold. So let's keep all of this in mind and move back to the chart. By the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. Now, what we have to keep in mind is that this area, all this area here, has important structure. This is a demand and support zone. If we extend it to the left, we can see this even more clearly. This was previous support, turned resistance here, now again turned support here. The market is currently respecting it as support. So there is a possibility to see more institutional longing inside of this area. Now, if that will happen, because we still don't see that, we still don't see institutions adding longs. If they will not add longs, that increases the probabilities of a potential breakout to the downside. However, if institutions start to add longs, at that point, there is an increased probability of seeing a potential rejection to the upside away from the zone. So if we do see institutional longing, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this strong demand and support zone. That definitely wouldn't surprise me. All this free education and analysis that you see me share on YouTube is actually just the tip of the iceberg. If you want to learn more, I really suggest that you head over to the website linked in the description, and you will be brought to my website. Here, I really put together the best trading program on the planet. You can gain access to all my courses from the really basics of charting to the more advanced topics like building portfolios of automated strategies using the MQL programming languages, building portfolios of strategies, and much, much more. You have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one mentoring directly with me, the COT data software, which often you see me use in my free analysis. And this is our all-in-one program. So you gain access to everything immediately. You gain access to all my EAs. So essentially you have access to my strategies, which you can then personalize to your own preferences. You gain access to the trading show. And here you basically can see the presentation of each and every one of my EAs. So each and every one of my strategies, which you will have access to. You gain access to the trading show, which is essentially a live stream of all trades as they're happening on my account. So opened, closed, managed, everything in real time. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign up process. So I really suggest that you go and check it out. The link is in the description, and I will see you in it. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.